While the herd looks at these half-empty office towers and sees only decay and ruin, a new aristocracy sees a battlefield. They don't see an investment, they see territory. This isn't just about buying real estate. It's a strategic seizure of power, and in this video, I'm going to give you the playbook. You turn on the financial news, and all you hear is nervous chatter about the commercial real estate crisis. They throw around terms like vacancy rates, loan defaults, a CRE apocalypse. And you know what? They're right to be nervous, but they are drawing all the wrong conclusions. They see a collapse. A select few, however, understand that collapse is just the prelude to consolidation. It's that chaotic, violent, and beautiful moment where fortunes aren't just made, power is transferred on a generational scale. This isn't about flipping houses or being a landlord in the old-fashioned sense. This is about understanding the tectonic shifts in our economy and positioning yourself to acquire the foundational assets of our cities at a deep discount. It's about recognizing that the gleaming office building that once housed 1,000 accountants isn't just a building anymore, it's a failed state, a kingdom without a king, waiting for a new ruler to claim it. The strategy we're about to break down is not for everyone. It requires capital, guts, and a predatory vision. It requires you to look at a 40-story monument to a bygone era and see not a liability, but a launchpad for a new dynasty. We are going to dissect this opportunity, walk through the strategy for its capture, and lay out the vision for its transformation. This is the art of turning systemic failure into personal sovereignty. To understand the scale of this power grab, you have to understand the nature of the beast you're hunting. Let's create our target, an archetype of the opportunities popping up all over the urban landscape right now. We'll call it the Titan Tower. Imagine a 500,000 square foot office building, built in the late 1980s. A respectable Class B asset, not the shiniest tower on the block, but a solid fixture in a city's business district. For 30 years, it was a reliable workhorse, filled with law firms, accounting practices, and regional sales offices, the physical manifestation of the 20th century white-collar economy. Then, the world changed. The first blow was a slow bleed. Newer, sleeker Class A towers went up downtown, luring away the best tenants with better amenities and floor-to-ceiling glass. The Titan Tower started to feel its age. The lobbies felt a little too dark, the HVAC systems a little too expensive, and the layout ill-suited for the new collaborative space trend. The second, and final, blow was the pandemic and the normalization of remote work. This wasn't just a downturn, it was a fundamental shift in the very idea of the office. The law firm leasing 3 floors realized it could function just fine with 1.5. The insurance company discovered its adjusters were just as productive at home. As leases came up for renewal, they were downsized, shed, or abandoned completely. By early 2026, the situation inside the Titan Tower is dire. Its vacancy rate, once a stable 10%, has exploded to 60%. And while the national office market shows some signs of life, with overall vacancy rates stabilizing in the low 18% range as of early 2026, this recovery is not lifting all boats. It's a flight to quality. The best, most modern buildings are capturing the shrinking pool of tenants, leaving older assets like the Titan Tower functionally obsolete. The remaining tenants are a mix of small firms on short-term leases and the truly desperate. The building's net operating income, or NOI, has plummeted. It can't cover expenses, and more importantly, it can't cover the debt. And this is where the opportunity crystallizes. The Titan Tower was bought in 2016 with a 10-year, $50 million loan, packaged into a commercial mortgage-backed security, CMBS. That loan is coming due now, in 2026. This building is a tiny piece of a massive, system-wide phenomenon known as the maturity wall. Across the United States, a colossal wave of commercial real estate debt is coming due. After lenders granted extensions to kick the can down the road, a massive volume of loans has been pushed into the 2026 to 2028 window. Estimates suggest that anywhere from $539 billion to over $900 billion in commercial and multifamily loans are set to mature in 2026 alone. Owners who borrowed in an era of rock-bottom interest rates now face a brutal reality. To refinance today, they need to do so at much higher rates, but the property's income can no longer support the payments. So where does that leave the owner of the Titan Tower? Trapped. They don't have the tens of millions in cash needed to pay down the loan to a level a new lender would even consider. They don't have the millions more for the capital improvements, a new lobby, modern amenities, that might attract new tenants. They are paralyzed. The loan is transferred to a special servicer, a company whose entire job is to clean up defaulted loans. The special servicer isn't a landlord. Their job is to resolve the bad debt and get as much money back to the bondholders as possible. They aren't sentimental. They are motivated to find a solution, and often the cleanest solution is a fast sale. This is the moment of conquest. The Titan Tower is no longer just a failing building. It is a distressed asset, cut loose from its legacy ownership, held by a motivated seller, and seen by the market as toxic. The herd sees a falling knife. You see a kingdom in chaos, its gates undefended. The previous rulers have been vanquished. The throne is empty. And you, the strategic acquirer, are preparing to make your move. This is more than a real estate transaction, it's a power vacuum. And you are here to fill it. Acquiring a fallen kingdom like the Titan Tower isn't a simple purchase. It's a campaign, a series of strategic maneuvers designed to get the asset on your terms, at your price. The public markets are for amateurs. The real power moves happen in the shadows of distressed debt and off-market deals. Your first move isn't calling the broker on the sign out front. That's amateur hour. Your campaign starts with intelligence. You need to map the battlefield by identifying the points of financial distress. You're hunting for bad loans, not for sale listings. Your team, specialized brokers, lawyers, analysts, is constantly scanning for weakness. They're tracking CMBS markets, looking for loans transferred to special servicing. This is public information, a distress flare for anyone who knows where to look. You're building a watch list of properties where the owners are about to lose control. You're also building relationships with debt brokers, special servicers, and foreclosure attorneys. You are positioning yourself not as just another buyer, but as a credible solution. You're the one who can take this messy problem off their hands, quickly and cleanly. In this world, speed and certainty are your currency. Once the Titan Tower is in your sights, the strategic options for acquisition open up. This is where you separate yourself from the herd. The amateur only thinks of buying the physical building. The conqueror thinks in terms of control. One of the most potent strategies is to not buy the building at all, but to buy the debt. The special servicer is holding a $50 million defaulted mortgage on a tower that might only be worth $25 million today. The bondholders are staring down a huge loss. You can approach the servicer and offer to buy that non-performing note from them for, say, $20 million in cash. You're offering them a fast, certain exit that, while painful, is better than the time and cost of a messy foreclosure. If they accept, you've just become the bank. You now control a $50 million mortgage for a cost of only $20 million. You can foreclose and take the title, or negotiate a deed in lieu with the powerless original owner. You've used the debt to wipe out the old equity and seize the asset for cents on the dollar. It's a classic power move. But let's say the most direct path is to buy the asset itself after the servicer forecloses. This is where your due diligence becomes an act of strategic reconnaissance. An average investor's due diligence is a checklist. Yours is a forensic analysis of weakness and opportunity. Your engineers crawl through every inch of the tower, but they aren't just looking for cracks. They're calculating the precise, all-in cost of its resurrection. Your lawyers dissect the zoning code. Are there city-level incentives for adaptive reuse? Many cities like New York and Chicago are actively promoting office to residential conversions with tax breaks and zoning reforms. A friendly political environment is a force multiplier for your strategy. Your analysts go deeper than generic vacancy stats. Now, you have to be smart here. While the long-term need for housing is strong, the national multifamily market in 2026 is normalizing. A wave of new supply in some regions has led to flat or even slightly negative rent growth. Your analysis must be hyperlocal. What are new apartments in this submarket renting for? Who is your target renter? This isn't abstract data, it's the bedrock of your entire financial model. Armed with this intelligence, you go to the negotiation table not as a hopeful buyer, but as the only viable commander for this asset's future. The special servicer knows the building is bleeding cash daily. They know the pool of buyers for an empty, 40-year-old office tower is tiny. You, however, are not buying an office tower. You're buying raw material. Let's say they have it listed for $30 million. You come in with a hard, all-cash offer of $20 million, a 30-day close, and no financing contingency. Your offer is a narrative. You show them your analysis, the massive capital required for conversion, the risks, the uncertain market. You frame your low price not as an insult, but as a reflection of reality, a reality only an expert like you can handle. If you're finding this playbook valuable, do me a favor and hit that like button. It tells the algorithm that strategic thinking is still alive and well and helps more people learn how to turn market chaos into a personal empire. Now, let's structure the seizure. You won't fund this $20 million acquisition entirely out of pocket. That's not how empires are built. They're built with leverage. You construct a capital stack, a sophisticated structure of debt and equity that minimizes your cash and maximizes your control. You might get a senior loan from a specialty lender for 50 to 60% of the price, $10 to $12 million. The remaining $8 to $10 million is the equity gap. Amateurs write a check for this. You bring in partners, but not as equals. You use preferred equity investors, family offices or high net worth individuals who contribute capital for a fixed return, say 10 to 12%. They get paid before you, the common equity holder, see a dime. You're essentially using their capital as expensive debt, allowing you to control a $20 million asset with maybe only $2 to $4 million of your own money. You have now executed the seizure. You control the Titan Tower for a fraction of its replacement cost. The old regime is gone. The keys are in your hand. But the conquest is not over. You've taken the territory, now you must build your empire. Owning the decaying shell of the Titan Tower isn't the victory, it's just the beachhead. The real power move is the transformation, bending this monument of a dead era to your will and giving it a new, dominant purpose. The strategy, a full office to residential adaptive reuse conversion. This is one of the most challenging campaigns in modern real estate, which is exactly why the rewards are so immense. Others see insurmountable problems, the conqueror sees a barrier to entry that keeps the competition out. The first battle is architectural. You can't just put beds where desks used to be. A 1980s office floor plate is a deep, dark cavern. Residential units need natural light and windows. This means your architects must become masters of efficiency, lining the perimeter with apartments while using the dark interior core for gyms, lounges, and storage. Then there's plumbing and mechanical. The building has to be re-cored with a web of new pipes for kitchens and baths in every unit. It's open heart surgery on a skyscraper. The costs are substantial, potentially running from $200 to over $500 per square foot, depending on the building. This is where your forensic due diligence pays off. You budgeted for this. A conventional developer would be terrified by a $40 million construction budget on top of a $20 million acquisition. You see it as a $60 million all-in cost for what will be a brand new asset. The second battle is political. You are not asking for permission, you are presenting a solution. You frame your project as a public good. You're taking a vacant, tax-draining eyesore and creating hundreds of new homes, addressing the city's housing shortage. You're creating jobs. You are revitalizing a dead block. You make sure every city official understands that your project is a win for them. The third and final battle is creating a new identity. The Titan Tower is dead. In its place rises the Apex Residences, or a name that signals rebirth. The dated lobby is gutted and replaced with a bright, two-story space that feels like a boutique hotel. The rooftop becomes a stunning resident deck with a pool and panoramic views. You're not just building apartments, you are manufacturing a lifestyle, calibrated perfectly to the demands of the modern urban renter. Let's translate this vision into the cold, hard numbers of empire. Your acquisition cost, $20 million. Your conversion budget, $40 million. Financing, legal, and soft costs, $5 million. Your total basis, your all-in cost, is $65 million. Over a 24-month construction period, you transform the tower. You create 350,000 rentable square feet, comprising 400 apartments. Your hyperlocal market intelligence told you new, high-end units command rents of $3.50 per square foot, for an average rent of about $3,000 per unit. Within 12 months of completion, the building is 95% leased. Now, look at the new reality you forged. 400 units at an average of $3,000 a month generate $14.4 million in gross rent annually. After vacancy and concessions, your effective gross income is about $13.68 million. Operating expenses run at about 35%, or $4.78 million. Your net operating income, NOI, is now a staggering $8.9 million per year. This is the alchemy. You took an asset with virtually zero NOI and created a cash-flowing machine. The war is over. Now, you reap the spoils. The conquest of the Titan Tower is complete. The dust has settled, and a thriving city within a city stands where a hollow relic once stood. Now, we measure the victory in two ways: financial dominion and strategic power. First, the financials. The language of victory here is the capitalization rate, or cap rate. In the 2026 market, a brand new, stabilized Class A multifamily asset could trade at a cap rate between 5.0% and 5.5%, as capital aggressively pursues high-quality properties. Let's be conservative and use a 5.5% cap rate. Your net operating income of $8.9 million, divided by a 5.5% cap rate, gives your property a new stabilized value of over $161 million. Pause and absorb that. You took control of a failed state with a total all-in cost of $65 million. Through a strategic campaign, you have forged an empire now worth $161 million. That's a value creation of $96 million. This is where your capital stack structure shows its genius. Your total project cost was $65 million. Assume you get a new loan for 65% of the new value, roughly $105 million. The first thing you do is use that to pay off the entire $65 million project cost. That returns your initial investment and pays back your preferred equity partners. After this refee, you own a $161 million asset with $105 million of debt, leaving you with $56 million in pure, tax-deferred equity. And you did it all with an initial cash investment of just a few $1,000,000. You've achieved a truly astronomical equity multiple. This is generational wealth creation. But for the true conqueror, it's not the ultimate prize. The ultimate prize is the power. You now control a fortress in the heart of a city. You command an asset that provides essential housing and generates millions in free cash flow every year. You took a symbol of urban decay and made it a monument to your vision. You didn't just invest in the city, you imposed your will upon it. This is a defensible, hard asset that can't be inflated away. While others chase fleeting digital trends, you own a piece of the earth, a concrete and steel bastion of wealth. You can hold it and let the cash flow fund your next conquest. Or you can sell, realize the profit, and move on to a larger target, maybe 2 towers next time. The choice is yours. That is power. The ability to dictate terms and operate on a plane far above the market noise. That is the ultimate spoil of war. So we come back to where we started. While the masses see a commercial real estate apocalypse, the new aristocracy sees the greatest territorial redistribution of our lifetime. The decay of the old office economy is not a crisis, it's a clearing. It's the necessary chaos before a new order is established. The playbook we've outlined is a testament to a simple fact: in times of great change, the biggest opportunities are reserved for those who run towards the turmoil, not away from it. It requires a rejection of conventional wisdom and an embrace of calculated, predatory aggression. It's proof that real estate, at its highest level, isn't about finding a good deal. It's about manufacturing value where others only see blight. It's about having the vision to see a residential empire in the bones of a dead office building, and the courage to execute that vision. It's about understanding that the most valuable assets are not bought, they are conquered. This is not a game for the timid. But for those with capital, expertise, and unwavering belief in their strategy, the rewards are absolute. Not just financial freedom, but sovereignty. This is the new Game of Thrones, played with steel and glass. If you want to learn how to play it, subscribe to the channel. The battle is just beginning. It's time to choose your side.